Welcome back to ASEAN Business Report. Germany's biggest banks and insurers will meet with the finance ministry in Berlin today as they seek to reach an agreement on their contribution to a Greek aid package. Global stocks rallied today as Germany's biggest banks and insurers will meet with the finance ministry in Berlin tomorrow as they seek to reach an agreement on their contribution to a Greek aid package. According to Reuters, German banks have agreed in principle to use a French proposal for banks to roll over some Greek debt for 30 years as the basis for negotiating private sector participation in a Greek debt rollover. German and French lenders are the biggest European holders of Greek debt, and their participation in the plan is vital to the European Union goal of getting banks to roll over at least 30 billion euros of bonds. The debt swap is part of a broader aid package European Union leaders have pledged to pass next month to prevent the Euro region's first default a year after the Greek bailout that failed to stop the debt crisis. Mike Shia, a managing partner and trader at Direct Access Partners LLC in New York, said the market needs some kind of clarity as a permanent solution is not expected right now. However, Mike suggested that if the German banks are in agreement with the French plan, there would be hope for a gradual resolution. The details of an agreement, including the volume of any rollover and new bonds issued, still need to be finalized. Apparently, Reuters reported the previous French proposal draft for restructuring the Greek debt requires bondholders to choose a period in between July 2011 and June 2014. Banks would also reinvest 70% of the proceeds when Greek bonds fall in 2011 to 2014 and cash out the rest. Of the amount reinvested, 50% would go into the new 30-year bonds and 20% would go into zero-coupon AAA bonds with deferred interests.
Asian stocks rose with the regional benchmark index powering its loss for the month on speculation Greece may not be allowed to roll over some of its bonds. As news of Greece's sovereign debt crisis will less likely spread across Europe, Asian stock markets have been shooting up. Some of the stocks, such as the Esprit Holding Limited, the Hong Kong-based clothier that gets most of its revenue from Europe, rose 1.7%. Standard Chartered plc, the UK's third largest bank by market value, gained 2.1% in Hong Kong after the London-based lender said it may post a double-digit growth in pre-tax profits in the second half. Front Retailing Co. led a rally in Japanese department stores operators after a report showed that the nation's retail sales fell at a slower pace than economists estimated in May. Investors are becoming more optimistic, said Fumiyuki Nakanishi, a strategist at Tokyo-based SMBC Friend Securities, expressing there is a sense that Europe is cooperating to avoid a worst-case scenario. The MSCI Asia-Pacific Index rose 0.3% to 131.16 as of 7:22 p.m. in Tokyo. With 3 stocks rising for every 2 that dropped, the gauge tumbled 7.1% from this year's May 2nd high through the yesterday amid mounting concern that slowing a U.S. economy, Europe's sovereign debt crisis, and China's step to curb inflation will lower earnings. Japan's Nikkei 225 stock average rose 0.7%, while Australia's S&P ASX 200 index added 0.3%. Hong Kong's Hang Seng Index gained 0.1%, and China's Shanghai Composite Index was little changed. South Korea's Kospi Index decreased 0.4%. Recent stock declines were arrested amid signs that Greek policymakers and creditors may be headed towards a rollover agreement involving 70% of their maturing bonds to prevent a default. Lawmakers in Greece are due to vote on a 5-year austerity plan this week that must pass for the country to secure aid from Europe and the International Monetary Fund to cover 6.6 billion euros of debt in August.
As the second quarter is coming to a close, the U.S. stocks have finally started to rise, with the Dow Jones Industrial Average reporting a three-digit rise again. Nike rallied 10% as higher North American sales helped the world's largest sporting goods company top profit projections, as several analysts point that Nike's gain is a good sign. Home Depot Inc. climbed 2.4% after the largest U.S. home improvement retailer said that it is targeting about $3.5 billion in share repurchases for 2011. The S&P 500 advanced 1.3% to 1,296.67 at 4 p.m. in New York, rising to the highest closing level since June the 3rd. Down 1.1% for the nearly ended quarter, the Dow Jones Industrial Average rose 145.13 points, or 1.2%, to 12,188.69, with 26 of its 30 components gaining, led by Caterpillar, the world's largest maker of construction equipment, which gained 3% to $103.84. ExxonMobil increased 2.2% to $79.63. Alcoa also advanced 2.4% to $15.65. The Nasdaq Composite Index gained 41.03 points to 1.5%, or 2,729.31, leaving it off for the 3-month period ending Thursday. For every stock that fell, 4 gained on the New York Exchange, where 804 million shares traded. Composite volume neared 3.4 billion. More than 6.1 billion shares changed hands on U.S. exchanges at 5:12 p.m., 14% less than the 3-month average through yesterday.
So we're seeing a lot of greens and pluses today,
Finally.
including gold, as gold gained for the first time in 4 days in New York, as concerns about the Greece's debt crisis and weaker dollar spur demand for the metal as an alternative investment. Gold for the current delivery closed at $1,499.70 US per troy ounce Tuesday on the New York Mercantile Exchange, up from the $1,496 US late Monday. European Central Bank Executive Board member Jürgen Stark said in an interview with Die Welt, the newspaper, that he doesn't expect the international community to finance Greece further after July if the country doesn't implement its austerity plan. The dollar declined versus the euro after ECB President Jean-Claude Trichet said policymakers are in strong vigilance mode, signaling they intend to raise the interest rate next week. Analyst at Commerzbank AG in Frankfurt, Daniel Brisman, said it's surprising that gold cannot profit more from the uncertainty surrounding the Greek debt crisis. Today, it is definitely the US dollar that helps the gold price. Gold for August delivery gained $6.60 US or 0.4% to $1,503 US an ounce by 11:52 a.m. on the COMEX in New York. Gold is up 5.7% in 2011 after climbing in the past 10 years, the longest run of gains in at least 9 decades in London. Europe's debt crisis pushed the gold to a record of $1,577.4 US on May the 2nd. Prices are unlikely to top $2,000 US without another round of so-called quantitative easing from the Federal Reserve. Francisco Blanch, head of the Global Commodities Research at Bank of America Merrill Lynch, said Tuesday at a conference in New York.